Traders, in 93 years of recorded market behavior, September is known for being the worst performing month on average. The question is this year going to be any different? So in this week's analysis, I'll be having a closer look at that, and let's get to grips with what is really going on in the markets. Before we do that, a quick look at the economic calendar for the week coming up. First of all, I note we do have, out of Europe, we have the German IFO business climate. What is the expected sentiment for that going to be? It's expected to be slightly lower than the previous month, but we'll see if that's going to be the case. US consumer confidence as well. We want to have a look at that. Then, of course, out of Europe again on Thursday, we'll have CPI data. Want to see what is happening there with regards to inflation and, of course, unemployment claims coming out of the US, and then the Fed Chair Powell speaking on Thursday. So all of this is likely to add above average volatility in the markets, and this last week was a little bit crazy as well. So my expectation is this coming week is going to provide plenty of above average volatility, and therefore I would be exercising some restraint and some caution. Starting off here with the VIX, we had a bit of a spike up this week. Relatively speaking, you can see we've just sort of started to head up a little bit from the lows. A little bit more volatility entering the markets this week. So interesting to see if that's going to calm back down. We've headed up this way before. Are we going to see a break of this and a start to move a little bit higher? So that I want to add in on top of everything else. The fact that it's September, the fact that this last week was a little bit more choppy than expected. If we have a look, for example, at the dollar index, we actually effectively still closed higher. So that puts us at our 10th week of moves to the upside, relatively rare. We're battling to get through this 105 level for the dollar index. Struggling a little bit of bearish divergence. Doesn't mean we won't necessarily break through, but it did battle this week, and ultimately, although it closed a little bit higher, it hasn't really moved on much. So there are signs of exhaustion coming in at a major level, and so I want to see what's going to happen with that. When we look at it in isolation from a monthly perspective, it looks somewhat bullish. In fact, the implication here is unless something changes in the last week of September, we're likely to see this continue to break to the upside. And because it's been consolidating, when it breaks out, whether it's to the upside or the downside, it's likely to actually start moving relatively aggressively. Okay, because it's not been doing anything for approximately almost, let's go, what is that, December? Yep, so it's going to be for 9 or 10 months where it hasn't really done much. It's going to want to move somewhat aggressively. So there may be something that triggers it. There's a lot going on in the world right now. It could be anything if that is going to be the case. On the other hand, should it fail at this time and start to come back down, then we will just remain within this range for September and potentially start to move out in October or November. If we have a look at the euro dollar, you can see it's also trying to turn around here. The MACD is a little bit bullish. We're still stuck within this range. We're looking relatively weak, so that's 10 weeks to the downside there. Also a very rare kind of occurrence for that to happen. Obviously, there is a strong trend in place. The last time we really had a dedicated trend in that same way was when we had this 2022. We had this just on sort of relentless trend with that dollar to the upside, and we could be in a similar situation. But the conditions aren't necessarily the same. Okay, sterling as well, continuing to accelerate to the downside at this point, fell through the recent lows here. Certainly starting to look more and more bearish, and it's going to start to work its way towards next levels, which is 1.2, 1.23, 1.22, down towards 1.2. So I'm looking for some retracements, potentially this coming week. Certainly it's now overextended. I'm going to be looking for retracements, and then at that point, if there's no divergence, I'll be looking for trend continuation opportunities. Then it gets interesting. We have a look at the Australian dollar against the US dollar. It's still stuck within its range. And actually the last week was pretty much break even. So not a lot happening there and possibly sitting at support. So we could find, again, if we get that weaker US dollar, there's a little bit of strength with the Aussie dollar and the Kiwi dollar. We might find that they actually start to climb this coming week. Kiwi dollar here as well. You can see it's attempting to turn around. We've got that bullish divergence. We're trying to break through this level. If we break through that, we should go past 0.6 and start to work our way up to 0.61. You can see here it's also trying to stay above this level. So it isn't just Aussie dollar, it's the Kiwi dollar also looking to do that. Then we have a look at dollar yen. Dollar yen continues to look bullish. So one of the things that happened in 2022 when we had that stronger dollar, we also had the yen correlated to that. And we have a similar type of thing happening now. So technically speaking, we've got similar behavior, but you can also see that it's sitting at a major level. And the Bank of Japan is not necessarily happy with this. So again, this is areas where it's starting to reach that upper limit of where they're going to want it to be in terms. They might start instituting interventions or changing their policies to reverse that. Looking at dollar Swissy as well, you can see now starting to break up a little bit higher, starting to look more and more bullish rather than bearish, coming back into major levels here. And again, it's overdue, I would say, for a bit of a correction, but just look at that solid series of bullish candles. This is not normal, therefore something is up. Okay, the question is, how much longer is it going to be up for? Well, we're going to have to see how that goes. Then have a look here, for example, at dollar CAD. Dollar CAD still just overall, if I go back to almost a year ago, it's been stuck largely within this range. It's not a perfect range, but you can see, although it has been dripping down a little bit here, it's back within this kind of central area around 1.35, relatively consistent in its behavior. All right, moving across and having a look at gold. So last week I spoke about the fact that I wanted to see gold break up through this level. It did break up through that, had a massive reaction against that 1940 level and back down, and then managed to close back up above this level. The weekly is very much a doji. Okay, so much, not really a lot happening with that. This week I want to see if we can continue and push up a little bit higher. We had a stronger dollar. When you look at it from a monthly perspective, you can just see price trying to keep it above that 1900 level. Lots of wicks underneath that. But we actually had a little bit more of a bullish candle on some of these charts on the monthly last week, and subsequently they're not looking that way. So the monthly candle is always fluid, obviously, until you get to the end of the month. So silver here, for example, you can see is producing a higher low. So we've got a low over here, higher swing low, and a higher swing low here. And actually looks closed a little bit to the upside there. So a little bit more bullish on silver. And again, wicks on the monthly there. So hinting at that there is definitely some bullishness there. It's just not very strong. Copper slightly different. Copper producing a series of lower highs, actually looking relatively weak here, but it is still sitting above support and above the 50-period moving average. So I'm going to wait until next week and see what happens there. Natural gas sitting right at the bottom of this range. Lots of wicks above that, quite weak underneath the moving averages. This not looking strong at all. Okay, so it's attempted to turn around in the past, just not able to succeed. As this is the whole point of technical analysis. Of technical analysis and trading, is that we are managing and trading real-time fluid situations, okay, as they unfold. All right, moving on to crude oils. So crude oils are a little bit overextended. We did get a retracement this week. We did push up a little bit higher, break the high, but we can't seem to get past that $90 level. You can see we finished with a doji candle as well here on the weekly. So we could potentially be looking at a retracement on the weekly basis now, back down towards 85. So I'll be monitoring the low of this weekly candle as well as the high, if we're going to maintain, if we can get back up above this level. We've had a little bit of a breather. We could go into a bit of a consolidation, but I'm going to be monitoring that low. So if we break through that low, we could see a deeper retracement to the downside. And this would be similar with Brent crude as well. You can see, although it's pulled back here, a lot of indecision or spinning tops as well, dojis, depending on what you prefer to call them. And again, we've got another low of this candle. I'm going to be keeping an eye on that. We could see a bit of a deeper correction to the downside. Okay, just as part of its normal trend to the upside, we might have a temporary retracement on the higher time frame is effectively what I'm saying. Okay, moving on to the global indices. So these are sort of the MVPs right now because the market is very much doom and gloom. And don't forget that a lot of it is cause and effect. You know, if we keep talking about the fact that the market we're expecting something to happen, ultimately it can snowball into people starting to get twitchy. The markets get twitchy, they overreact. So for now, what I would say is significant is that we have broken through the weekly low here. We have a weekly downtrend on the Dow, which is technically a monthly retracement. Okay, so the monthly here, if you look at this price action, is still in an uptrend. And the only thing that I think also is worthwhile mentioning here is we've got a downtrend. We've closed below that 50-period moving average. Okay, so technically in the past, those fulfill some of the criteria of being within a bear market. Other criteria, hold on, because you want a whole lot. You need a whole lot of indicators that say yes or no. Other things would have to be that the other US indices would also have to be in that situation. There's a whole lot of other things we would have to do. We'd also have to be breaking through significant lows. And in this particular case, although we've broken that low, we haven't really broken these previous lows yet. But this is something I'm definitely going to be watching out for. Could we find support at this point and recover? Yes, because we are still on a monthly uptrend. All right, so we really haven't changed the monthly trend, but the weekly is a big one that I do want to be paying attention to. And can we recover from here? Yes, it's certainly possible. If you look, going back to July, going back to June, and going back to earlier in June, you can see that there's a level where we could find potential support this week. Just highlighting that, and it always pays to be glass half full rather than glasses half empty. Okay, this is one of the reasons is that, generally speaking, you'll find that the most successful investors, historically speaking, pick your favorites, will tend to be optimistic about the capabilities of the market. All right, that's one of the characteristics that they have. Then having a look at the S&P, also we've broken through the lows here, so I do want to mention that. But when you look at it from a monthly perspective, this is beautiful. It's a very crisp level. We've broken through it. We've come back to retest it. So for me, the new levels to test here would be 4331, or potentially if you really had to go a little bit lower, I would say down towards 425. But I think where we are right now is a very suitable area, and actually looking at it from a weekly perspective, coming back down into this area is very suitable. Okay, so this is a great area this week for us to find support. I'm not saying we're going to, I'm saying that if we do find it in hindsight, it's going to look like it was an obvious sign that we could find support in that area. We're a little bit overextended to the downside. Again, this week, I'd like to see if we can bounce and recover from that by the end of the week, or at least by the end of September. So historically, let's talk about this. Historically, September has been, not every single year, but it has a reputation for being the worst performer or the most bearish one. So it's kind of appropriate, given the general sentiment and a lot of the negative media out there, and a whole lot of things going on. It's kind of appropriate. It would be an amazing sign if we had a positive September, but it's kind of appropriate when you think about it that we are getting a bearish September. Okay, so what's important though is that if we do manage to produce a strong reaction off those levels and we start to break through these lower highs, then that is again in hindsight going to turn out to have been a great buying opportunity. So when you're wondering what those buying opportunities, those bottoms of the markets look like, this is what we're going to be looking for, because we know that it's going to bottom at some point. The question is it going to bottom here, or is there something else happening? But we have to be prepared for multiple outcomes so that we're prepared for what to look for, and when it happens, we take action. And then having a look at the NASDAQ here, which has just come down towards these lows. Now, technically, we're still in an uptrend until we really break and close below this low over here, which is 14th of August, the week of 14th of August. When you look at it from a monthly perspective, we've had a really big run. Let's go and have a look at this. Let's have a look at it from a Fibonacci perspective. So let's bring this up and let's grab the swing low here and let's measure up to the swing high here. We haven't even retraced 382. Okay, we haven't even done that. If you want to bring it from this slightly higher low, then you could argue that we're just coming down to the 382. So both of those retracements, ladies and gentlemen, you have to concede. That means we really haven't even done the shallowest of retracements within a market, if you're a Fibonacci follower. Okay, so again, bring some context in here. How bad is the situation? It's uncomfortable if you were buying up here, I acknowledge that, but this is not an indication of absolute collapse. And so doom and gloom, I'm not going to allow that. Okay, so the Russell as well, this is range bound, so no change or nothing odd about that behavior for me. I'm going to move on. The FTSE, I think, is a great, and again, I'm going to put this in as a good sign. If overall there was a global market crash happening, we'd be seeing bearish signals across the board. We're not. In the UK, which is historically a poor performer, we've got a strong bullish candle. We've just managed to break above the previous highs within this range, which is way more bullish than I would have expected historically. One more thing that I would add is that let me explain. My optimism comes from experience and also my mentor, as well, traders that I've been influenced. Okay, so it's not just created in a vacuum. It's created from people who've walked the path before me, and I've made the mistakes of thinking doom and gloom and everything was going to crash, and it's going to be different this time. And not to say that it won't one day, but it is different. It never is different, or never has been. Okay, so it just means you've got to be prepared. The odds are that things are going to proceed as they normally do for the most part. Most people want things to keep going the same way they do. Okay, so let's have a look at the DAX. Okay, so I would have preferred for the DAX, obviously, I would have preferred for it to be nice and bullish. I did speak in the past about this kind of divergence at this level, indicating that we could see a move to the downside, and this looks more head and shouldery to me than I would have expected. When I look at it on the monthly, it's really the minor breakthrough at this level that I don't like. Okay, we've got a lower high on the MACD on the monthly. Excuse me, but it's the fact that this is almost a failed breakout, okay? That I don't really like the look of. So I think it's fair to say that there is a good chance that we could see the DAX drop lower down towards 15,000. 40,800, I think that's a fair thing. And then from that point on, we'd have to see. So what could happen is we could ultimately have a bullish candle here and take another run and break up through that. So I'm not really willing to read into this that, oh, this means we've got a double top, we're definitely coming down here. That you have to do when you get more evidence. So in other words, remember that technical analysis is really about identifying the most immediate probabilities wise, the most likely move that's going to happen in the next impulse. That's what's going to happen. You can't predict several impulses down the line. So you could predict yes, it's highly probable that if it breaks through here, this is its next target. But you can't say that if it breaks through here, it's definitely coming down to here. You can't do that. Okay, so hopefully that makes sense. So let's have a look at the ASX. The ASX as well has had a solid bounce off this level. It's still generally very choppy. The monthly isn't over yet. So I really would prefer to see what this is going to be. Is it going to close below here, or is it going to close back up above here? You can see that's a strong reaction. And usually this would be followed by moves to the upside. I need to see this. Not enough data to explain what's going to happen there. And the Nikkei as well overall is very much, it's had a fantastic move. See the kind of breakout it did after. So I was talking earlier about how that we might see some of the markets do a really, really big move. If that dollar was consolidating, for example, and then broke out, we could see a move. It could be something similar to this. But also this retracement here, to me, shows that right now the market is just undecided. It's not heavily bearish, and it could do a natural retracement back down to the 30,000 level, back down to the moving averages, and still be a healthy monthly retracement. That's really important to keep that in mind. So this is really where we are. I just want to get some perspective on it. We have not shown, ongoing failures and attempts and failures and eventually the weakening of the markets. We're not seeing that. We're seeing what appears to be a monthly correction, which looks really bad on the daily and the weekly so far. Okay, that's what it looks like. Okay, so moving on to equities. Let's have a look at this. So Apple, again, is in a really good area to turn around it. Will it? I mean, at this point, I would say it's closed below this level, and therefore tap down towards 170 actually makes quite a bit of sense. Then let's have a look at Amazon. Again, so this to me is a more bearish setup. We get a slightly high at a major level, and we get a bit of not heavily bearish divergence. And actually, when you look at it again from a monthly perspective, this is a nice move and a nice, happy, healthy retracement down towards 125. So all of this is to me, is not a problem. Okay, that sort of makes sense. That a good run up, bit of a correction down here so far, not really a worry. So really, 125, I want to see. I'll take another look at it when we break through that 125 level. Okay. Then we have a look at AT&T, still at the bottom of the range. A little bit of a failure here, but I would say that until it gets past that level, that's what I would expect. It's an uptrend on the daily. It's not so bad. Then we have a look at ARK. So ARK is still stuck within this range, no change. Okay, so I spoke about that being a potential. Would this be a bottom? No, we broke through that. So we're still stuck within the range. Okay, so it just means more of the same for now. Glencore, still stuck within the range. Move on. Tesco actually performing well this week. Nice little bullish candle here. It's poking up high. That looks nice and bullish so far. So Tesco's looking okay. Amex fell through. Okay, so again, I highlighted the same candle for the same reason we fell through that. We've still got areas here where we can find support. So it's not about kind of just looking for any excuse. We've still got areas here we could find support. But yeah, now I want to see what happens as it works its way down here. So let me just mark these other lows down here. It's got the potential to head down to those. Berkshire Hathaway. So Berkshire Hathaway, I spoke about last week, and the more I think about it, the more I think it's a valid suggestion to make, is that in a way, Berkshire Hathaway could be regarded as an index of its own of the general overall health of the economy, because, Buffett and Munger like to pick good companies. So we've got a little bit of, again, we've got another little bit of a kind of a failure in this area. So we could see a retracement down towards 334, which puts us down into these areas down here. Perfectly acceptable from a monthly perspective. Okay, now it's had a good run up. It's had good 6, 7, 8 months. And normal healthy retracement is fine. Okay, so again, I think it's valid or fair that it could work down to 356, down to the moving averages here, or down towards these old lows here, and still be nice and healthy. It doesn't look like it in real time in the moment, but this is the thing. When you hear people saying, well, why didn't we buy when things were looking dire? It's because this is what it's like. Think about, just take a moment and soak up what the expression is ennui, what the ambience feels like now. It's incredibly pessimistic and the sky is falling. And let's just say that it does actually turn out to be a higher low and a bottom, and the market moves up from here. People are going to forget that in this moment right now, everything just seemed terrible. I'm not saying that's definitely the case. I'm saying that if we do move up from here, I want you to just remember what it felt like at this point in time. Okay, so we're coming down towards these old lows here. Therefore, we could move down and just break down towards those lows there on Coca-Cola, BP again, crude oil up at these levels. I'm not too worried about both BP and Exxon because they're very much kind of highly correlated with oil. So I'd rather be watching that. But you can see they're also battling a little bit with the level here. So here we're possibly seeing a little bit of a crossover between crude oil and shareholder fear. So you're seeing that's why they're battling a bit with the level. General Motors still within the range and at the bottom of the range. Let's see if that breaks out to the downside. What would I, in case you're wondering, well, what would I think if a lot of them were at the bottom of, if a lot of these broke out of the bottom of the range, then, yeah, maybe we've got something else happening that we need to think about. Sure. I still think it's a mistake to assume that that's where we are right now. This is a beautiful break and a retest. It's a good area for it to find a base, and so far it's a bit of a doji candle, so we'll see if it can work its way from there. I'm just going to mark that as that possible bottom there. All right, that's JP Morgan, Adidas again, breaking through the lows here. This, when you see this happen, break these lows, you are a monthly retracement. That's what it is. Not a very strong angle, but certainly not invalid. Back down towards that 158. Okay, this could be that very first move, which is maybe not as strong, and then it picks up on that. Okay, again here, for example, Mets has had a really ridiculously strong move, pullback down towards 250, 245. I think would always be a nice, healthy one. Morgan Stanley, back down to the bottom of the range. I don't think there's anything more to be said there. Nvidia, this is beautiful. Sorry, and let me explain why it's beautiful. It's beautiful because we need it. We've had an incredibly strong run. We need a healthy retracement there. We need to have this pullback. It's normal, it's natural, it's had an unnatural surge. It needs to have at least a bit of a nice correction from that. And a pullback towards the old highs, to me, would be a beautiful, very normal, natural, healthy pullback. Then potentially a nice bullish recovery up until January or February or March. Netflix coming back down into old highs so far, all good. Okay, it's still in the green box, so to speak. So still give it some of that. PayPal Holdings struggling a little bit, but in the way that ARK used to struggle as well. PayPal I'm not really sure what it is. I haven't had time, but I'm always interested, by the way, if you have fundamental things that you're like, listen, PayPal not involved in cryptos, they're missing out on market share, they've got poor management. I don't know. I'd love to hear your input on that. I'm being genuine here. I'd love to hear it so that there's stuff I can go away and have a look at. Spotify, very cool. Nice little bullish candle here. I'm okay with this for now. It's battling a little bit, but it's not terrible. Spider, okay, now it's back at the lows, equal lows over here from March. Let's see if it can recover from this. But looking heavily bearish. I mean, looking very, very bearish. So we'll see if that's going to be the case, if it's going to push lower. FedEx, looking okay, coming back in to test that for support. So not all of them are dying. We're not seeing it across the board. We've got Tesla still stuck within this triangle. Okay, within, let's call it a pendant. They're all pretty much the same thing. So the question is it going to break to the downside? Remember, I was saying to you that if we broke below these lows, we're back below that 50-period moving average, then it's serious. Okay, but if that's the case, Vanguard, break up here, pull back into the moving averages. So really what we're seeing here, ladies and gentlemen, okay, so let's just say that it does turn out okay. We're going to look back, and what we're going to have seen, most likely, is we had a monthly retracement. We had a monthly retracement before we started the next move. And then it's going to look like that was a ridiculously good opportunity to get in. I would say this. For me, I would love to see a small green candle, which would then be October, which could then be the potential sign of the bulls coming back in, and then we could be at the beginning of the next move up. But often what happens is when we get that bullish candle, it just goes. It just goes. So actually, it's probably better at that point to be monitoring the daily or the weekly. Walt Disney, just tapping below those lows. Okay, just still in this area. It could have turned around from here. It could. But I also feel it isn't just a general market thing. In fact, here's my question. Again, I would love some input on this. Why do you think that Disney, and there's other companies that are taking strain, why do you think specifically that Disney might be battling and having gone back all the way to its 2013, 2014 prices? I'd love that input. I've watched a few other YouTube videos with great ideas and analysis. The streaming wars are a big part of that. But still, I'd love your take on that. Okay, so we've got T-notes are still moving to the downside, so we're still not seeing, to me, we would have to see that happen. And actually on this note, I want to talk a little bit about inverted bond yields. Are there situations in which we could have that happen? And yes, I'm going to give you a couple right now. So one situation where inverted bond yields might not be a bad thing is when they're caused by temporary factors, just obviously such as a sudden or unexpected increase in demand for short-term debt. So obviously this can happen, for example, when the government needs to borrow money quickly to finance a war or another major expense. So in that situation, I would see that, for example, as the current administration putting money into infrastructure, putting money into all the different areas. And so I would see that as possibly could be related to a trigger of it here. Another situation could be where it's caused by a change in monetary policy, for example. So we're talking here about the US economy, and that would be, for example, the central bank is raising interest rates, which can obviously lead to inverted bond yields, and we know that's the case. So we know that that could be a contributor to it. And obviously that would then be because the yields on those shorter-term bonds would rise more quickly than the yields on the longer-term bonds. Okay. The reason there's a lot of panic about it is because they have historically been an indicator of, or a good reliable indicator of preceding a recession. So there's no doubt that if we do have a recession, then they'll be pointing to this as one of the indicators. But is it possible that we could ever have inverted bond yields which isn't followed by it? And yes, but it would involve things being done differently. And I believe that things are being done differently. I think that, for example, we're not doing tax cuts for the rich anymore. We're trying to, in the US, they're trying to inject wealth into the middle class the way it used to be pre-90, but before the 90s, back to the 80s. So I would rather go back and have a look at how those things were kind of going back then. So I think that this is my position. That's what I'm going to take on it. Because I think that if we do come out of this all right, people are going to be confused about how that could possibly have been the case. And I'm going to suggest an idea if that was the case. Okay. So they're not a guarantee the recession's imminent, but also I think that they would imply that they would say that the market is a bit uncertain. So possibly it's the interest rates that from monetary policy, central banks, combined with a bit of cash injection, maybe COVID stimulus cash as well. There's all kinds of stuff where that could be an explanation for it, and it isn't necessarily an indicator of an upcoming recession. So I'm looking at both. I'm just trying to propose a way in which that could be explained away. All right. Now looking at cryptos. So Bitcoin, indecision. All right, a failed attempt to go higher. Ethereum moved down a little bit lower, still stuck below that 50-period moving average. We've got a couple of the others. Let's have a look. So Solana moved to the upside. I'm looking at the weekly here. Still below the moving averages, so it's got a battle to get through. It's a bit of a ceiling. And then we've also got another indecision one here on Cardano and Binance as well. Looking a little bit weaker. Okay, so we did, a lot of the markets are showing undecided or weak. Not too many of them looking bullish in isolation. That isn't, at this time, is not enough to conclude where the markets are going over the next few years. We need a little bit more data, unfortunately, which means we've still got to see how those monthly trends turn out. So ladies and gentlemen, may you have a fantastic week. Manage your risk and your emotions and your mindset appropriately. Try and stay neutral or positive as opposed to negative and panic. That never really helps anyone. All right. And I will see you in the next week's episode. Thank you very much.